This is an urgent update for everyone who receives Social Security benefits in the United States. If you depend on retirement benefits, SSDI, SSI, or any related federal payment, there is an important March 5 deadline that you cannot ignore. Federal authorities have confirmed new administrative reviews, account verification procedures, and payment processing adjustments that could temporarily delay or suspend payments for individuals who have not updated or verified certain required information. This is not a rumor, and it is not a minor technical change. It is part of a nationwide effort to reduce fraud, update records, and ensure that benefits are sent only to eligible recipients with accurate account details. Acting before March 5th can help protect your monthly payment and prevent unnecessary disruptions. Many seniors rely on Social Security as their primary source of income. For millions of retirees, that monthly deposit pays for housing, groceries, medications, utilities, and transportation. Even a short delay can create stress and financial hardship. That is why understanding what is happening now is so important. Recent internal updates within the Social Security Administration have triggered a series of automated reviews. These reviews focus on identity verification, direct deposit confirmation, mailing address accuracy, and eligibility cross-checks with other federal and state databases. If any information does not match or appears incomplete, the system may automatically flag the account for review. When an account is flagged, payments are not always permanently stopped, but they can be delayed until the issue is resolved. In some cases, beneficiaries receive a notice requesting updated documents or confirmation of personal information. In other cases, individuals do not realize there is a problem until their expected payment does not arrive on schedule. The March 5 date is significant because it aligns with a processing cycle for mid-month and early-month beneficiaries. Files that remain unverified beyond that date may move into a secondary review queue, which can take several weeks to resolve. The most common issues involve outdated banking information. Many seniors have recently changed banks, opened new accounts, or closed older checking accounts. If the direct deposit information on file does not exactly match the account currently active at the bank, the payment may be rejected and returned. When this happens, it can take time for the returned funds to be reissued. Another common issue involves mailing address discrepancies. If the address on file does not match records used by other federal agencies, the system may temporarily pause payments while identity confirmation is requested. There is also increased coordination between Social Security and other benefit programs. For example, if someone receives supplemental security income and there is a reported change in living arrangements, marital status, or household income, the system may automatically review eligibility. This does not mean benefits are automatically lost, but it does mean documentation must be accurate and up to date. March 5 is effectively a soft administrative deadline before automated processing moves into a stricter verification phase. Some beneficiaries are also affected by Medicare premium adjustments. If a person's income changed in recent tax filings, their Medicare Part B premium may have been adjusted. When premium amounts change, net Social Security deposits can look different from previous months. In certain situations, if premium withholding information is not properly synced, temporary discrepancies can occur. These discrepancies can trigger alerts in the system, especially if the net deposit amount differs significantly from the prior average. Another factor contributing to the urgency is the increase in identity theft targeting seniors. Federal authorities have intensified fraud prevention measures. This includes additional cross-checking of Social Security numbers, date of birth records, and bank routing details. While these measures are designed to protect beneficiaries, they can also create temporary holds if inconsistencies appear. Acting before March 5th allows individuals to verify their information proactively instead of reacting after a payment delay. Stimulus-related adjustments are also part of the broader picture. Although no new nationwide stimulus program has been universally announced, there have been adjustments in tax credit reconciliations and delayed processing of prior benefit corrections. Some beneficiaries who previously received supplemental pandemic-related credits are now seeing reconciliation reviews. If any overpayment or underpayment was recorded in prior years, the system may attempt to reconcile the account. These reconciliations can sometimes create confusion when deposit amounts fluctuate. Retirement beneficiaries are particularly vulnerable to administrative errors if they recently moved or changed financial institutions. A simple data entry difference, such as an abbreviated street name versus a fully spelled out version, can create mismatches across databases. While that may seem minor, automated systems are designed to flag inconsistencies. Once flagged, an account may require manual review. It is important to understand that this situation does not mean Social Security funds are ending. It does not mean benefits are being cut across the board. It means that record verification processes are being strengthened. The goal is to ensure payments go to the correct individuals in the correct amounts. However, when safeguards increase, so does the risk of temporary disruption for those with outdated information. Many seniors are unaware that even small changes in life circumstances can require updates. Moving to live with a family member, changing from renting to owning, updating a joint bank account, or switching from one direct deposit account to another are all examples of changes that should be reflected in official records. If they are not updated promptly, discrepancies can arise. Another area under review involves representative payees. Individuals who have someone managing their benefits must ensure that the payee's contact information and banking details remain accurate. If the representative payee's account information changed and was not reported, payments can be delayed. The March 5 timeline applies in these cases as well. There is also a growing focus on overpayment recovery. In recent years, federal authorities identified cases where individuals were unintentionally overpaid due to outdated income reporting or delayed system updates. Efforts to recover overpayments have become more structured. While many cases involve small amounts, the process of recalculating payments can temporarily interrupt deposits. Beneficiaries who recently received overpayment notices should confirm that repayment arrangements are clearly documented to avoid unexpected withholding adjustments. Cost of living adjustments have also increased monthly payment amounts for many retirees. While these increases provide relief against inflation, they also mean that payment calculations are slightly different from prior years. Any mismatch in benefit category coding or entitlement status could trigger a review. Acting before the processing cutoff reduces the chance of interruption. It is also important to recognize that the Social Security system processes millions of payments each month. Most beneficiaries will not experience any issue. However, those with unverified updates are at higher risk. Waiting until after a missed payment creates more stress than taking preventive steps now. Banking institutions have also updated security requirements. Some banks now require enhanced identity verification when federal deposits are received into new accounts. If the bank cannot fully verify the account holder's identity, it may reject the deposit. This rejection sends the funds back to the Treasury, creating delays that can last several weeks. Ensuring that bank records match Social Security records exactly is a simple but critical protective measure. Beneficiaries receiving disability benefits should also be aware of periodic continuing disability reviews. While these reviews are separate from the March 5 administrative processing timeline, overlapping verification can create confusion. Ensuring that medical review documentation and contact information are current helps avoid compounded delays. Housing changes are another significant factor. Seniors who transitioned into assisted living facilities or nursing homes sometimes experience benefit recalculations, especially if Medicaid becomes involved. If updated living arrangement information was not processed correctly, payment adjustments may be temporarily paused until confirmed. Direct deposit remains the fastest and safest method for receiving benefits. Paper checks are rare and often slower. Individuals still receiving paper checks face higher risks of delay, theft, or misdelivery. Transitioning to secure electronic deposit significantly reduces complications. Another element connected to March processing involves tax season coordination. During tax filing season, income data flows between agencies more actively. If discrepancies arise between reported income and benefit eligibility thresholds, automated alerts can appear. These alerts do not automatically cancel benefits but may require clarification. Some seniors have recently experienced smaller net deposits due to Medicare premium increases or changes in prescription drug plan deductions. In many cases, the gross benefit remains unchanged while deductions increase. Understanding this distinction is important so that unexpected deposit amounts do not cause alarm. In addition, widows and widowers who recently transitioned from spousal benefits to survivor benefits may experience recalculations during system updates. If documentation of a spouse's passing was recently processed, account coding adjustments can temporarily delay one payment cycle before normalizing. The March 5 date serves as a processing marker. Files confirmed and verified before that date continue smoothly into the next payment cycle. Files requiring clarification after that date may move into extended review. Acting early reduces stress and financial uncertainty. This update is about preparation and protection. It is about ensuring that the income relied upon each month arrives without disruption. Administrative updates are a normal part of maintaining a large federal benefits program. However, awareness makes the difference between a seamless deposit and an unexpected delay. For seniors living on fixed incomes, stability is everything. Rent, utilities, insurance premiums, and prescription costs do not pause when payments are delayed. That is why proactive verification is essential during this period of increased review and fraud prevention.